Welcome back everyone to the channel. Another crazy day. Another one. We still have another hour and a half left in the day, but I there's like zero chance that the market reverses at this point. Things are looking bad. Things are looking very bad right now. We got stocks slipping. Not the craziest red day we've seen by a long shot, but if we look at our VIX volatility index going absolutely insane today. Skyrocketing. It was up one point at about it was up at one point about 28% on the day. So the VIX just shooting out of a cannon. I mean, just flying. This news of these banks collapsing, Silicon Valley Bank officially shut down today by regulators. It's sending ripples through the banking industry as a whole, ripples through fintech, especially if we look at SoFi down about 10% today, Square down like 4%. So it's sending ripples. Also, sending ripples through the XLF financial sector. It has completely dumped these past 4 trading days, down nearly about 9%. Some stocks like Wells Fargo down terribly. I mean, Wells Fargo's green on the day, but you can see Wells Fargo looks so good to the downside. This like rising channel, it is officially breaking out of it. If we close this weekly candle below this trend line, it looks so good to the downside. So while Silvergate was like the 16th largest by market cap bank on the stock exchange. I'm not sure how big, what is it, SIVB, right? Yeah. I'm not sure how big Silicon Valley Bank was, but you can see the drops in the stocks. I mean, this bank is literally bankrupt. It literally had a full-blown, like, Great Depression bank run, and they were trying to raise cash. No one wanted to give them any money. They can't fund all the withdrawals that they're getting right now. It's crazy. It's straight up like 2008 Great Depression, like bank runs, legitimate bank runs where businesses are running to get their money out of these banks. So this isn't like doomsday. This isn't doomsday for like the big four, Wells Fargo, JP Morgan, Chase, Bank of America. It's not like the end of the world, but it just does not look good for the banking sector as a whole. And that is always what happens with these banks. You never hear anything bad until it's too late, until the shit has completely hit the fan, until you're seeing about it on CNBC. You never hear about the uncertainty about, oh shit, we're actually running out of money. You don't know what the hell they're doing behind the closed doors. That's the thing. That's what this always happens. 2008, this is exactly what happened. Everything's good. Everything's fine. Everything's dandy. Boom, shit hits the fan. Oh, it's already too late. So now it's a question of, I don't think any of the big banks, but where else? These venture capitalists that lost all their money on these things, they're going to owe money to other banks. Banks probably lent some money to these Silicon Valley, to Silvergate banks. So it's like a whole web. This is always what happens. The greed is just so entrenched. There's such a huge web of over-leveraging of debt amongst these banks that we don't know who owes money to who. We don't know who is about to default on these loans, on this debt. We have no idea. So the immense uncertainty is very evident today with the VIX just skyrocketing. Really not the biggest rug pull. Really, the market isn't down that much. I mean, we're down about 1.5%, but if we just look at the chart, it looks like this is the beginning of a very, very big pullback. The volume on the S&P 500 is startling. It is immense, crazy high volume. I mean, we already have 126 million shares traded, and we still have power hour to go. So we could be closing up around 160 million shares, and that would be the highest volume we've had since over here in September. I mean, over here, this is where the market bottomed. That is the volume we are looking at today. This is just crazy volume. So very alarming. But all in all, stocks aren't down that much. I just think this is a big tell. So another big thing we got to talk about today, we got our jobs numbers. And those were interesting. The jobs report was very interesting. U.S. employers added 311,000 jobs in February. That's way more than they expected. But we had unemployment tick up. Finally, unemployment ticked up from 3.4% to 3.6%. So those two kind of cancel each other out. Honestly, I think the Fed will be happy to see unemployment going up, but they need to see those month over month job numbers go down. Like, that is still more jobs than we had added in December. That's more than we had added in November. So we're starting off the year red hot. Just so many jobs being added. 311,000 jobs added over February is a very high amount. So if we look at the bond market is actually bouncing today. Very interesting. I mean, 2-year yields are plummeting. So the bond market is doing a very interesting thing here. Bond market bouncing hard. I mean, yields have dumped today, which typically is good for stocks. I think these job numbers are giving us a little hope that we won't be getting a 50 basis point hike this next FOMC meeting, because now we have dropped our chances of that 50 basis point hike has dropped all the way from like 80 to 40. So that's been halved over the span of like a day and a half, which is crazy. So that's good. But is it really good? Because unemployment's rising, which now we're to the point of, is the market going to be in the mode where good news is bad news, or is all news bad news? And I feel like we're heading towards all news is bad news, because yes, we want unemployment to rise, but unemployment rising means people are going to start cutting back on spending because people are going to start worrying about their jobs. So not good for the stock market. Earnings recession, which we are kind of sort of in, but this is like the real beginning of it. Like, how bad will it get? So really interesting. Obviously next week, all eyes are on CPI. If CPI comes out red hot, this changes everything. I guarantee we go back up to 80, 90%, 50 basis point hike if that CPI read comes red hot. I believe we also have PCE coming out. I think they all come out in the same week, right? They usually do. No, we do not get PCE. PCE comes out the following week. Friday. Right? Where's PCE? PC not until way over here? Oh, yeah, PC doesn't come out until March 31st. Oh, okay. Well, that's interesting. All right, I guess that comes out after the FOMC meeting. That's the Fed's typically their go-to inflation data is PCE prices, but that doesn't come out until after. So anyways, all eyes will be on CPI, and then that's Tuesday. Following day will be PPI. Those will be huge. And I think if those are red hot, I mean, that's where we are right now. It's if those come in red hot, which all signs point to they will. All signs point to inflation is sticky, here to stay. Core inflation will be high. I'm not sure what the consensus. I don't know if they've had any consensus surveys or anything on what they expect it to be yet, but I'm pretty sure they're expecting it to be about 0.4% month over month. So will be very interesting. That will change everything. So right now, bond yields are dumping on that jobs report data, but stocks are also dumping on this weird bank data we're getting, all this crazy stuff. So just very interesting time we're in right now. I think it's too early to go like crazy heavy. I mean, fundamentally, I would be heavy short. Technically, the chart looks like it's a good idea to be heavily short, but I just know that CPI and PPI data will change everything. But technically speaking, from a technical analysis point, I mean, 392, we've given that up, and now we are continuing below it on insanely heavy volume. So from that standpoint, to me, it looks like a good technical bet to continue to the downside. So let's just take a look at where we could see the S&P do a little bouncing. So we have taken out all these levels of support. We took out 387. We took out 393. We took out 391. We took out 388. So we've taken out all these demand zones. So now below it, you can see we're bouncing at 386, this next demand zone. And then we have big demand right here. Big old demand all the way down here. So that'll be the next big level. Next big retest. This zone from 384 down to 380 basically, and then below that we do have gaps to fill to the downside. Small gap right there, but yeah, really, if we give up 375, it's looking like, yeah, we're making new lows. I would not be surprised if we're making new lows. If we have to, if the FOMC meeting comes out and they're just like hawkish as all hell, and they are telling us, hey guys, this inflation ain't good, it's getting worse and worse, then I expect we will see some new lows. I expect uncertainty is going to be at all-time highs because now no one knows. No one really, literally no one knows what's going to happen next. January, that's when the market was in fairy tale land. We knew inflation was gone, right? We knew all these things were good. We knew everything was fine and dandy. We knew the Fed, they were going to be real nice, and they were real nice. You know what? But data. That's all that matters. And if banks start having legitimate Great Depression bank runs, which is, it's just crazy. So that's where we're at. Let's look at Nvidia. Nvidia, I'm still holding their short, but I'd ask you please consider hitting the subscription button. Please hit a like if you've been watching any of my videos. You know, I've been telling you guys this stuff was going to happen for days now, for weeks, for a month. I've been telling you guys all my videos. You could call them clickbait, where I'm like, sell everything. Well, sell everything. Did you sell everything? Did you listen? I've been telling y'all for free. You got to get these videos on the daily, man. God damn, I've been telling y'all this shit was going to happen. It was so obvious, so obvious. Don't listen to these stupid pumpers, the stupid, like, Meet Kevins on this site that are like, well, guys, things look pretty good. Things look good. Things look pretty good. It's just like they're in fairy tale land. Absolutely. Just insanely, stupidly optimistic for no reason. So, let's look at Nvidia. Just looking at the 4-hour chart, zooming out, we have Nvidia. We broke out of this. Remember that rising wedge I told you about yesterday? Guess what happened? We broke out of it. We went to the downside, and now we are breaking out of. This was little boy rising wedge. This is Big Daddy rising wedge. We were breaking out of Big Daddy rising wedge. Whew, man, we broken that trend line. Oh, my face was in the way. That's embarrassing. But we're breaking out of this rising wedge right here. This trend line, breaking out of it on heavy volume on this 4-hour candle right now. Not crazy volume on the daily, but I'm expecting it to pick up. Now we just really need to take out 225, and we need to not quit making higher highs. This is just what Nvidia does over and over and over. We just keep making higher highs, higher high, higher high. So got to make that lower low, got to make a higher low. I expect if we do get a bounce, we'll bounce up to 238, exactly like we have been, maybe up to 240, but if once again we get terrible inflation news and Nvidia somehow continues to go up, then I will start to close these shorts. But right now, technically speaking, the risk to reward is heavily in Nvidia's favor. The chart is screaming downside to me with this rising wedge breaking and with the fundamental news we're getting. So that AMD looks good to the downside. AMD with a just disgusting like bull trap, the standard like bull flag that we have, we break out. So we're not like back below the danger zone. I need to see AMD below 80.30. You can see this massive zone right here from like 80.50 to 80.30. Back below that, and we look like we want continuation to the downside. Tesla is holding up pretty good today, but Tesla was kind of leading the market down yesterday, or not leading it, but it's been one of the weaker names to the downside, so it's already done a bunch of selling. I'm not shocked that it's kind of holding up pretty good today. Consolidation day. I think if we run back up to 180.50 on Tesla, that's a good shorting opportunity, but yeah, otherwise, Microsoft down bad. Google looking phenomenal to the downside. Google, look at this trend line, man. Look at this trend line. So this is the Big Daddy trend line on Google. This is the one we broke over here. We got that bull trap. This was our year-long 2022 downtrend, this big red line. Bull trap. We break out of it. We sit up here. We go back below it. After 6 trading sessions, we're back below this downtrend. We go up to it. We retest it. We reject it again. We reject that baby again right there. You see that? And right here, we rejected her again. So we're holding up on this, and now Google is just obviously bear flagging. Look at this trend line. I mean, we bounce, bounce, bounce. So do we bounce off it again, or do we crash through it? I would venture to guess on the back of bad data, we will crash through that. Amazon, still stinking pile of shit. Looks terrible. Wants to go down. Netflix. Man, Netflix looks like it wants to go down. Look at this rising channel that's broken out of. I mean, it broke out of over here, so I'm late to the party. I mean, Netflix was a phenomenal short. I know people, this was so simple. Like, look at this. It is broken down 12% after breaking this rising channel. But now it's at a huge level at 290. If it can hold 290, that'd be huge. But then below 280 it looks phenomenal to the downside. I mean, it's got gaps to fill. There's volume gaps. It looks good to the downside. Everything does. Talk about Apple yet? So Apple, another one of my favorite shorts I've been talking about for a while. What's really interesting is the volume hasn't been crazy on Apple. I mean, Apple has just been very strong, but it will go down. It will fail. It has held up this 200-day moving average, but below 150 on Apple, which we are right now. If we close below 150, I love it to the downside, but I'm short on it. I think 150 will be my stop loss. I think I'm going to hold this one tight. I could see us doing another one of these, kind of bounce and retrace up here. I could see that potentially, but if we cross this line at 150, I'm just going to cut, because Apple, if it stays this strong, if the sellers don't step up on Apple, it has me concerned. But I still like it to the downside. We still have a big gap to the downside. I mean, I don't know, not much else to say about Apple. It looks really good to the downside. So, God, really high volume selling. Now we're getting a pretty good bounce on everything. It looks like finally the bulls have sort of showed up. But yeah, that's where we at, folks. On the S&P 500, 3,900. If we're below that for a while, it looks terrible. If we run back up, I could see us running back up to test 3,900 right now. Not gonna lie. I can see the S&P gonna do that right now. Looking at NASDAQ. Same idea. We could also just be running up to retest, but we've just put in a lower low. Still, we're holding that 200-day moving average, but we closed below that. That'll be the first day we've closed below the 200-day moving average on the NASDAQ since the end of January. So, yeah, that's what things are looking like, man. We're just giving up all these 200-day moving averages on everything. But anyways, thank you guys for watching. Drop a like if you made any money off any of these plays. But this is not financial advice. This is for education purposes only, entertainment purposes as well. So thank you for watching. I will see you guys on the next one. Let's see what happens Monday. Monday, nothing happens on Monday. So I'm telling you right now, I'll probably upload a video on this weekend, but Monday, nothing's going to happen. CPI data is so important at this very moment. Monday is going to be a nothing burger. So take that with a grain of salt. Or we could see a bounce on Monday. Honestly, I wouldn't be surprised by that either. So I'll see you guys.